Welcome to the new weekly outlook. We're going to get started with Euro USD first. At the moment, from a fundamental perspective, the EU and US are racing towards avoiding a massive tariff hike on EU exports, up to potentially 50% of a tariff hike, if no deal is reached by July 9th. The EU said that they would accept a 10% universal tariff with exemptions for pharma, semiconductors, and the autos industry. But without a deal, we're expecting a full-scale trade war could erupt, triggering immediate EU retaliation against sensitive US export industries. Both sides right now appear to be motivated to strike an interim deal to keep the talks going past that July 9th deadline. And when we're looking at what is the impact of this news for this specific pair, this is going to be a very important fundamental when it comes to moving this pair, especially as we're sitting at these technical resistance and support levels from a weekly and monthly time frame. So these tariffs are directly going to hit EU corporate profits and weaken the euro if there's no trade deal that happens and there is a EU retaliation that happens. But if there's a successful deal, that's going to support the euro by reducing uncertainty. And if there's any sort of failure to have a deal, that's going to boost the US dollar as a safe haven currency. From a market sentiment perspective, the risk of a transatlantic trade war will inject volatility across equities, commodities, and these currencies, encouraging a risk-off sentiment. So what that basically just means is that sell-off of equities and then buying up more of these safe haven currencies like the Japanese yen, Swiss franc, and the US dollar. Bottom line is that if there's higher tariffs, that's going to lead into higher cost, which leads into stickier inflation and a more hawkish central bank outlook, which then we're going to see the yield curve flattening and then putting more pressure on the risk assets. The ECB officials are going to be talking for the next couple of weeks, but tomorrow is going to be very important, where you're going to see the ECB president talking along with Powell talking as well at this forum organized by ECB called the policy panel. So we're watching that to see if there's any sort of hints towards a hawkish or a dovish outlook when it comes to these policies and exactly what they're watching out for when it comes to economic data points, so we can follow the same exact thing. So key fundamentals here, again, these trade talks, July 9th deadline, any sort of indication on a dovish or a hawkish outlook from the central banks. And then for the US specifically, it is NFP week. So there's going to be a ton of employment data that's going to come out. NFP this time is going to be on a Thursday because of the US Independence Day on Friday and it being a bank holiday. So there's a ton of employment data that's coming out between tomorrow, Tuesday, up until Thursday that we're going to watch out for. Looking at the technical side on a monthly time frame, we see that Euro USD has just cleared above a very strong support level on a monthly time frame, which is that 1.172. And then we are approaching, based off of a monthly time frame, another resistance at 1.19. And we can adjust this as we drop down to lower time frames and see new levels being formed. So based off the weekly time frame, these levels also check off that 1.172, which is that support for all this consolidation, quick little fake outs, but we push right back above it. And then resistance for all of this area here too. And then that 1.19 is a resistance for all this consolidation before that massive sell-off. Resistance for all this consolidation before a push back up. So we see that once price leaves this area here, there's a ton of volume to the upside or to the downside, depending on the fundamentals that come out. So that's why the fundamentals are going to be very important here based off of the daily time frame as well, where we have that massive push up. And then as we approach that 1.172, we start to see the volume dying down here a little bit. And you'll see as we drop down to lower time frames, you'll see more retest, more consolidation when you see a setup like that on the daily time frame. So here was another minor resistance that price broke above, continued to the upside, and then consolidated right at that 1.172 area, broke above it. We haven't had a retest here just yet. So what we want to see is price coming back and retesting this as we drop down to lower time frames, especially on the 1 hour time frame, 30-minute time frame, depending on how you're trading, if you're a scalper or intraday trader as well. What you want to see for those type of opportunities is price coming back and retesting into this area, because as you can see, this zone has been respected multiple times and there's a ton of wick rejections, a lot of volatility once price rejects it and then keeps pushing. So that's why it's a very important zone for price to respect prior to a continuation back up. So let's drop down to the 1 hour time frame. We see a break and retest setup, and then after that, we see the volume dying down here a little bit. So what I want to see potentially for a continuation for a swing trade opportunity is price to pull back and hold on to a support into the zone and then push back up. When that happens, that is a swing trade buy opportunity with stop losses being below this area or even tighter depending on your trading strategy. And then a continuation back up from there, or I want to see a consolidation formation and then a push back up as price breaks these highs to the upside of potentially 1.178 or 1.179, and then a push back up from there for those longer term buy opportunities. If you're scalping, then you're looking for those sell opportunities to come back down. That could be a good scalp opportunity going into London session or even going into New York with the high impact news that's going to be coming out tomorrow with all the central bank officials who are going to be talking at that forum, and then a push back up from there for those potential buy opportunities to the upside. Let's come over to USD JPY first. So with USD JPY, you got the same exact US fundamentals from a Japanese perspective, the Japanese yen perspective. You have the US and Japan trade talks that are also going on right now, where Trump is threatening new tariffs on Japan because of multiple different factors, including over US rice import refusal from Japan with a critical July 9th deadline that is overlapping with the US and the EU talks. The 90-day tariff pause will be ending soon, so if there's no deal, then we're expecting a sharp tariff hike on Japan, leading to that risk-off sentiment that we were talking about with EU as well. But there are hints towards more deals coming after the July 4th, and that is going to be creating more of a last-minute volatility for a lot of these pairs and in the market. So it's very important given that, again, we're sitting at these higher time frame resistance for a lot of the pairs and even support, as you can see here with USD JPY. This is very important because Japan is a key US trade partner, and these tariffs threats hit Japanese exports and hit the investor confidence as well, which then leads to a spike in that JPY volatility that we have been seeing in the market lately. If there's tariffs escalation, then we're going to be expecting a knee-jerk JPY strengthen, which is going to lead to a risk-off sentiment, and then also equity sell-offs overall. When it comes to the market sentiment, a risk-on versus risk-off, what are we expecting? If we get any sort of framework deal after July 4th, before July 9th deadline, that signals a de-escalation, then we're expecting the equities and the USD JPY to rally. For a risk-off sentiment, where we're going to see that the JPY strengthens and the equities drop, that would just mean that we haven't had a deal yet after July 4th, even leading up into July 9th, and the tariffs will resume. Right now, what we're seeing is more of a neutral market sentiment, more of the ongoing talks, more of the choppy headline-driven volatility, and not much happening in the markets just yet, especially as we're sitting at these key level supports. So when it comes to the economic data points, again, it's going to be NFP that's going to be driving this pair, along with the BOG summary of opinions that's going to come out this week. So that's another thing to watch out for too. So based off the monthly time frame, price is currently sitting at these all-time lows. Not all-time lows, but like monthly support areas. All-time lows in the sense of the last couple of years. We've just kind of been hanging around here. And then when we're looking at a resistance area, I'm going to mark off that minor resistance right here. So that's kind of the range right now that price hasn't really broken past in the last 2 months or so. We kind of just reject into it and then come right back down and close within this range. Based off of the weekly time frame, you can adjust this level more if you'd like, but I'm going to keep that resistance the same because that is that weekly resistance for this week so far. If price flips above 144.5, then I know that this weekly candle is going to be bullish. So then we can come back and target, around 146.2 or even higher for buying opportunities. For sells, I'm looking at price to break the previous weekly lows right down here at 143.8, and then a continuation down into 143.1, or if you want, even 143 flat, or we can keep it at 142.5. Any of those areas based off of the weekly time frame, that can happen as price pushes back down. Come onto the daily time frame and adjusting those levels, you see that last daily candle rejected 144.5, came back and closed bearish. This new daily candle had just started forming, so I want to see if it can break this low here below 143.8 and then continue back down. First area of target is going to be 143, being a very strong key level, and then a continuation down to 142.5. Come on to the 4-hour time frame, we start to see a little bit more consolidation formation here. So that's why it's very important to wait for 143.8 to be broken, and then a continuation down into 143 flat, which is right around here. So that 4-hour support, and then if you look to the left of where I have my cursor, you see all that resistance being formed right there too with this minor consolidation as price approaches 142.5. You come onto the hourly time frame, we're still in this bearish structure. Price is still creating those lower lows and lower highs. What we want to see for any buying opportunities here is price holding onto a support at 143.8 and then push back up bullish from there. So then we have our buying opportunities to the upside with an established support. If price breaks these lows, then we're looking for a retest and then a continuation down. So then we can target our longer term sell opportunity. Next up, I am going to have GBP USD, and then we'll move into GBP JPY. So with GBP USD, we already went over the USD fundamentals. With GBP right now, the main fundamental that is impacting the pound is this welfare bill. So there's a critical vote going on that welfare bill right now, that bill pretty much aims to cut any soaring welfare cost. And so this is very important because a failure to gain enough confidence or enough votes on this bill from the parliament is going to be seen as one of the biggest setbacks, political setbacks of the UK's Prime Minister Starmer right now. And that in turn is going to undermine his authority, which raises doubts on the fiscal control and in turn being bearish for the pound here. That failure also causes concerns around debt, which is negative for the UK bonds, higher gilt yields, and that causing more of a mixed GBP reaction, more of a GBP sell-off here. If there are rising welfare costs, let's say they don't get enough votes, and then these welfare costs continue to rise, that's going to lead into a higher structural spending, which keeps inflation expectations elevated, puts more pressure on Bank of England to stay hawkish, and could support GBP via rates, but weigh on it due to the political uncertainty. And we're looking for hints for that. So even going to tomorrow, again, Bank of England's governor is going to be speaking at that forum. So again, seeing, what kind of stance we're seeing there, a hawkish or a dovish hint from that central bank as well. When it comes to a risk on versus risk off market sentiment, what needs to happen here? So for a risk on sentiment, the bill will have to pass, which reduces uncertainty. It's going to support the pound, and it's going to cause a modest lift for UK equities. For a risk-off sentiment, let's say the bill fails, it's a major blow to the UK's Prime Minister. You're going to see a GBP sell-off happening. You're going to see safe haven flows into USD, Swiss franc, and JPY, and things like that. Right now, as price is pushing from a technical perspective, we are seeing that based off of the monthly time frame, price is pushing up even higher. And same thing, tapping into key levels. So key monthly support areas, resistance areas, things like that. That's where we're approaching. So that's why these fundamentals are so important. And of course, coming up to that July 9th deadline, we also need to see if there's going to be any sort of US and UK trade talk and some deals happening there. So one key level that price needs to break past right now is going to be that 1.375 area, and then a continuation back up bullish from there. But let's drop down to the lower time frames and identify our support areas, which is going to be that previous weekly's candle body open after it gapped down at 1.34 and then a push back up. Another area that you can mark off is going to be that previous resistance that price cleared above, right up top there, 1.357. Let's drop down to the daily and see if these levels check off. So you're going to look to the left. You're going to see what price has been doing at these levels previously, historically. So here we see that this level checks off because of it being a resistance and support for a lot of these fake outs that have happened, and then price pushes back up. We do see that price comes all the way down into that 1.357 area here, gives you a wick rejection, and then pushes back up. We come pretty close to it, and then a push back up, come close to it again, and then a push back up there again. So these are very key levels where you see a lot of reactions happening here. And then the further back you go, the more confirmations that we get from a price action perspective of price just tapping into these areas and keeps rejecting them over and over again. Coming onto the daily time frame, as we approach that 1.375 area, you start to see the volume dying down. So yes, there is some bullish momentum given the previous daily candle's closure, but we haven't broken the previous highs here. We haven't even tapped into that 1.375 area here just yet on the previous daily candle. Instead, we see that there is this consolidation formation, and then price tried to break up below it, couldn't really do that, came right back up above that area. So if we're looking for buys, we want to see a break and retest formation, some clear support resistance formations, and then looking for a buy opportunities above that 1.375 area. For any sells, I want to see a resistance formation here and then a push back down. But again, the fundamentals are going to be our support here. So going into tomorrow, it's going to be all of these, Fed chair, Bank of Japan governor, Bank of England governor, ECB president speaking at this forum. But then also from a USD perspective, you have the ISM manufacturing PMI coming out. You also have the JOLTS job openings coming out. So all of that is a red folder, high impact. All of that's going to give us pretty good momentum to move this pair. And then from a USD perspective, it's just a lot of employment data that's coming out for the remainder of the week, which might help with moving this pair. Let's go over to GBP JPY. So we have gone over the major fundamentals that will be impacting both of these currencies already. So for the UK, you have the welfare bill, you have the US-UK trade talks coming up to July 9th. And then for the JPY, we already talked about US-Japan trade talks. Any sort of geopolitical tensions, uncertainty will be helping boost the yen here. And then Bank of Japan summary of opinions that will be coming out this week as well. So same thing with this pair, where price is now clearing a major level based off the monthly time frame. Last month, we got a nice candle closure above that area. So you got that 197.1. And then I'm going to mark off these wick rejections since price has not been able to come back and tap into these areas unless it turns flat. Adjust that when you drop down to lower time frames, you see new levels being formed and all that stuff. So coming on to the weekly time frame, we see how last week we closed bullish right above that area. This week we gapped down a bit and then we made a top wick and we're kind of just hanging around here. So if you want to mark off another resistance, so what you need to see is price breaking out of this range this week. So then you have your buying or your selling opportunities for swing trade opportunities here, swing trades. Come on to the daily time frame, we reject right into that 198.4, and then we have a gap down that happens this week where the market opens up right around here after it closed up top there, made a top wick, came back, closed bearish, and we're currently sitting at this consolidation based off the daily time frame and these ranges. And then this new daily candle formation starts with a bit of a top wick and then starting to push back down bearish. Let's drop down to the 4-hour time frame for any sort of sell opportunities. I would want that 197.1 to be broken and then push back down. For any sort of buying opportunities, what I want to see is price holding onto a support right around here. So come back, revisit this area, hold on to a support, and then push back up. That way you have a good buying opportunity to the upside for about 96 pips, almost 100 pips or so. Drop down to the 1-hour time frame. On the 1 hour, all of this is just consolidation. So again, if you're looking for any short-term scalp opportunities, you can wait for these lows here to be broken. It's not a big enough range, honestly, for a quick scalp opportunity. If you're looking for 10, 15 pips, then sure. Or even coming back down deeper for about 50 pips, 46 pips or so. You can target that for a deeper corrective move prior to a continuation back up. But that is going to happen, and we're going to see deeper sell-offs if we start to see more risk-off sentiment in the market. But if price holds onto a support here and then pushes back up, then we're back on that risk-on sentiment, and you're going to have those fundamentals supporting that as well from everything that we have just talked about for the other couple of pairs. All right, so we went over all these. Let's go over to US 30. US 30 is US trade talks, July 9th, bets on the Fed rate cuts. So watching to see what Powell is going to end up saying. You have a lot of FOMC members who are also speaking throughout the week. You have employment data coming out, and it's also earnings season. So that's going to be very important to watch out for right now as well. So when it comes to overall equities in the US, not just US 30, but we're talking about S&P 500, NASDAQ, all of that. It seems like right now we have been up by 25% since April lows, which has been reported as the best quarter since 2023. And a lot of these equities have been driven by trade hopes, Fed cut bets, and also the strong tech and bank results that we have seen. Last week on Friday, we had the stress bank test results that came out, and all the banks pretty much passed that. So we saw a pretty good rally because of that too. When it comes to USD specifically, it's been the weakest month since 2017, which led into more of the Fed easing expectations, which fuels the global risk on sentiment and supporting a lot of these commodities as well. The catalyst for this specific pair are going to be the NFP that's going to come out on Thursday, and then also the July 9th trade deal deadline that's coming up. And then each of these could potentially swing a lot more momentum when it comes to US 30 specifically, as well as we're inching up closer to these all-time high levels. So it's going to be very important if we see, for example, with employment data this week, if we see strong numbers coming out, that basically is going to be leading more into a soft landing expectation when it comes to any sort of these recession talks and things like that. We're going to see the equities rallying up here. We're going to see that the US dollar is going to weaken a bit more. And then when it comes to, because of the US dollar being a safe haven asset and seen that way, and then if we see weaker employment data coming out, then that increases the recession fears. We're going to see the equities dropping, and then we're going to see more of a strength when it comes to the US dollar and the JPY strength. Right now, we're seeing more of prices tapping into these all-time high levels. We are seeing a lot more bullish momentum, and again, all of that being driven by the trade hopes, by the Fed cut bet that potentially can see a rate cut first happening in September, and then maybe seeing another rate cut going into December. And a lot of these earnings that are going to be coming out. So watch out for the earnings season too if you're trading US 30, NASDAQ, or any of these other equities. Now looking at the monthly time frame, we have been approaching, breaking above a lot of these monthly levels and then pushing back up. Right now, I'm going to mark off that candle body open right here for this bearish candle, which is, I'm just going to do 44,200. Let's drop down to the weekly time frame, and those are pretty much the all-time high levels that price failed to maintain above, and instead came right back down. So we need to clear this first, which is support for all of that, and then we can look for these resistance areas and target those. So this weekly candle right here made a bit of a top wick here already. So we want to see, can this candle maintain bullish? I'm going to mark off the candle body open right here at that 43,900 mark. If price maintains above that, I know that this weekly candle is also bullish. If it flips back down and pushes back down, then I know that this candle is going to be bearish, and that way we can target these sell opportunities to come back down into that 43,400 mark. Let's come on to the daily time frame. So on the daily time frame, we start to see that consolidation a lot more clearly. So that is a very strong resistance level that we have marked off at 44,200. Bottom wick rejections right into this area of 43.9, and then also support for all this consolidation, support area resistance, and then that sell-off that happened at 43,400. Come on to the 4-hour time frame, and even on the daily, actually, you had a break and retest all the way down here back in June 25th, and then after that, last couple of days have been insanely bullish here. And then when you come onto the 4-hour time frame, that's that last retest that we saw, and then a massive bullish momentum to the upside. And then today we finally start to see a bit more of a consolidation formation here. For any quick scalp opportunities, we're looking for price to break above that and then push back up, and then a continuation above 44,200. If price just rejects that and then breaks below 43,900, then we're looking for a sell opportunity to come back down and correct most of this bullish momentum to the upside, at least coming into that 43, almost 600 area, 500 area, somewhere around here, and then push back up just so we can correct this massive bullish momentum even from the daily time frame. When you come onto the 1-hour time frame, you see that consolidation a lot more clearly. So I'm not really looking for a trade in between here unless price can break below 140 or 43,900 and then break above 44,200. That's really the only time I would be entertaining any sort of trades here on US 30, not even scalp opportunity. So even if I drop down to 30-minute, I'm not entertaining anything until 44,900 or 44,200 are broken, and then looking for my trading opportunities there. So not even a scalp right here. I don't think it's worth it, given your stop loss is going to be somewhere here, and that's going to be a very tight one-to-one trade opportunity too. So I'm looking for a bit of a longer-term trade opportunity that gives me more room to head back up into these higher levels to the upside, and obviously we're going to be targeting those all-time high resistance levels from the weekly time frame too. So based off the weekly, we clear that 44,200. We are pushing right back into that 44,500 area. So we have a pretty good range. Other than that, just let price consolidate until we get the fundamentals that are coming out with employment data, earnings season, all that stuff, trade talks. We have a bunch of fundamentals that are going to be coming out soon. All right, with gold. On the monthly, as you can see, the volume is starting to die down here a bit more as we're tapping into these all-time high levels. So right now, gold is sitting at the center of all of these themes. So trade talks, geopolitical risk, the central bank policies, the risk on off sentiment. You're seeing a lot of the volume dying down here the last couple of months, where very little body kind of bodies here, a lot of wick rejections, things like that. So trade talks, these are the classic tail risk events. If the trade talks fail, that causes a risk off surge. Gold is going to spike as investors will be fleeing to safety. If deals are reached, that reduces global uncertainty. Gold is likely going to fade as the risk appetite also grows. NFP week. So this is going to be very important for gold. If we see weak data points coming out when it comes to employment data, then that is going to weaken the US dollar. We're going to see a bullish gold here. If we see strong US data coming out, US employment data, then we're seeing a weaker gold here. So based off of our technical levels, and then anything that happens tomorrow as well with Powell and all these central bank officials. So that too, that is impacting every single pair that we have looked at so far. So based off the monthly time frame, we have a lot of these weak candle closures kind of sitting at that all-time high at that 3,300 mark is pretty much where price keeps rejecting. I'm not going to mark off anything here on the monthly. I want to see more clear candle bodies. So that happens here on the weekly time frame. So what I'm going to do is mark off that resistance right here on the weekly time frame, which is going to be 3327.4. And then we have our candle body opens right here. This is our range at the moment at 3272.5. Let's come onto the daily time frame. On the daily time frame, we start to see how these levels are aligning pretty clearly, where you have that resistance even on the daily right here, and then that support right here as well. Last daily candle made a bit of a bottom wick right into this area, so you can mark that off too, where we have seen price rejecting into that previously, and then gives us pretty good bullish volume to the upside. So that's what we see right now, where you had that candle body closure right above that area, right above 3272.5, right into this range. So if we're looking for any buying opportunities, you drop down to the 4-hour time frame. I want to see price maintaining bullish above this area. Give me some break and retest formations on the 1-hour time frame, and then continue back up bullish for any sort of buy opportunity. So if price can break that previous hourly high and then push back up, that's going to be my buying opportunity to come back into 3327.4. But overall, as you can see, the structure is still bearish here as price continues to make those lower lows and lower highs. So this is where I would be very careful, just to make sure that this is not another lower high that price is making before a sell-off opportunity. As that deadline of July 9th is approaching closer and closer, we do want to make sure that we're keeping the market sentiment in the back of our mind of if there's any sort of trade deals again that happen, if there's a deal that is reached, then we are going to see that gold is going to push back down. But up until then, there's a lot of uncertainty where these nations are pretty much talking to each other. And then we still don't have a deal for a lot of these, like for the EU or even Japan, even the UK. We don't have those clear indications of what's happening with the trade deals just yet. So we have enough momentum to push back up potentially this week to come back even higher into 3327.4. But as price approaches these higher time frame levels, make sure that you're not just taking a trade based off of 15-30 minute time frame and expecting it to just blast up. That's not going to happen. So you need to keep the higher time frames in the back of your mind and understand what's the limitation of your trade. So that's pretty much it when it comes to this weekly outlook. It was a lot longer than the usual ones, but there's a lot of fundamentals that are coming out. There's a lot of fundamentals that are happening on a macro level. Make sure you guys are trading safe. Make sure you're not over risking, over trading, doing any of that stuff. There's a ton of fundamentals coming out, so there's going to be a ton of opportunities in the market. As always, if you guys have any questions, feel free to reach out to me on Instagram at SharmaFX or just comment below, and I'd be more than happy to answer any questions.